All right. Welcome to today's beginner's trading session. That's how I do Kai. So I am going to go through the step-by-step process on how hi Adrian, how I look at the market, how I mark up my zones, and how I would trade a swing trade if I were a swing trader versus how I would trade intraday trades. Okay. All right. So the 4 pair that we were given is, or that we came up with is AUD, USD, EuroCAD, GBP, JPY, and gold. So the first thing I would do is go to my higher time frame. And I like to look to see like the bias of the market. So if I'm trading market structure and price action, I'm looking at the higher time frame. And this is, I'm gonna go ahead down here. This is, because did that break there? Yep, it did. So that broke here. So right now, this is where we are. Okay. This is broken structure. Just push up. This is broken structure. So I look at the higher time frame to identify my market structure. And we had a break of structure here. And then we have since had a break of structure here. Okay. So now that that has swept the low, so we have external highs and lows, which means all these on the outside here, and then the internal, which are in between these zones here. And let me do another color. Why is not letting me? Okay. So we have the external points here. Okay, and then we have the internal swings. And then these are all the internal, right? Okay. Does everybody understand that much so far?
Yeah.
Okay. And then you see price broke this low here, pulled back, and then started selling down or creating lower highs and lower lows. Okay. And then price came here and consolidated. And then went back to selling. Okay. So that's the first thing I do when I look at the chart. I look to go see where is market trending. So as of right now, and I'm going to delete all that. We said this was our low. So currently this is our last swing right here. So that means price can come anywhere between here and here. So price came here, pulled back to the 88. So my guess is because price has broken this low, is that price will continue selling to the negative 27. So based off of that, I would be expecting price to pull back somewhere up in here to possibly continue selling and breaking this low here. Because this was the last swing. When I look at the last swing, always look at, when I come to the chart, that's what I look for, the last most recent swing. Price pushed up here and now is creating higher highs and higher lows. So, I would be looking for sales based on my analysis at this point. So we ended the week bearish. So I would be expecting price to at least come here to either create a double bottom. That's like 175 pips, or for price to start breaking these lows down to the swing, this low that was pushed up here. It's not a swing low because price didn't break above here, but it's a low, right? But once price breaks that low, then you'll have your swing high here. Okay, and that'll be the next zone that you can fib to see how far price could possibly come, and then possibly continue selling down to this low to break this low, or down to this -27. So now what I then do is go in based on the weekly or the daily, whatever time frame you mark up your key levels, any time frame below that is part of the key level. So, and what I mean by that is, if you mark up the 4-hour, then you'll see all the 1-hour key levels. You'll include all the 1-hour, the 30-minute, the 15, the 5, they will all be part of the key level. So I normally mark my key levels up on the daily, but if you want to mark them up on the weekly, that is fine as well. So when I'm marking up my key levels, I'm looking for strong areas, visible areas of support and resistance. Okay. And what I mean by that is I want it to be very clear to me when I mark up a zone. So that's very clear to me. If I have to squint and figure out, is this a key level or not, then I don't mark it up. So as you can see, this is a strong level of support and resistance here, right? Now, I usually try to get as close to price as possible, so that I don't have a lot of stuff on my screen. So, but that's how I mark up my key levels. So what I will do is come in, I come to, I look at the levels, I see if it makes sense to me. If it's not a strong key level, I just mark up. As you can see right here, price came here, tap, price came here, tap. All I need is 2 taps. All I need is 2 taps for the key level. And then the next one would be right here, because it was support, then it became resistance. This is one here, but you see how I have to squint to figure it out. Now, one of the other things you can do if you're not familiar with if you're not familiar with the line chart, if you're not able to see it as clear as as I see it when I'm marking up my charts, you can always go to the line chart. The line chart takes out all the wicks, right? And shows you more of where the candles are more of support and resistance. Like right there. And you can see that there's a tap here, right here, right here. This tap went out, this tap and went out, and this tap. So that's the next zone. Now, if you're not a swing trader, don't do it from the weekly, okay? You can go to the daily, you can even go to the 4-hour. But just always make sure you know where you are on your chart from the higher time frame. So before you start marking up, just know like we're in a downtrend, right? Hold on, this thing is driving me crazy. Okay, there. Okay, so just know that you're in a downtrend. You're pretty much looking for sells. And then you can put your wicks back on. So now we're going to go down to the daily. Okay, now that I'm on a daily, you can either mark up your last swing. And what I mean by that is based off of market structure. My last swing. Okay, before I do that. So we've had, so prices went up, came here, pulled back, went up, pulled back here, right? So that means this is our last swing. So I would need to see price break this low. I would need to see price break this low, pull back to then get in for the sell. Yes, we ended the day today with this bearish candle. Let's see what and it was a, it would be considered a, God's plan candle, right? And yes, it could start pulling back, but it could start pulling back to continue buying, or it can pull back to start selling. So this would be a trade that I would wait. I wouldn't trade. I wouldn't get in the trade. I personally don't get in the counter trend trade because this is a bearish order block. This is a bearish order block in a overall bearish market. Now, for the past few weeks, price has been bullish, but the overall market is bearish, and it's coming up on a trend line, so I would tread lightly. And because I'd marked this on the, okay, because I used the line chart, it made, I was able to mark up to, or I marked up pretty much the bodies, but I personally like to mark up the wicks. Because if price breaks above that wick, for me, that's a change of character. So, like right here, there's this swing here, price broke above, so price could pull back and keep buying. So that is why I mean, and you can buy because it is like currently bullish. There's a supply zone here, and maybe it'll buy up to there before selling. And I don't see anything else other than what may be in this wick that needs to be mitigated. So this could be a pullback for a continuation. So if I go to the daily, this would be my last swing. So you can mark up your last swing, the low, and then you can mark up your last swing high. Okay. So now price is either going to sweep this low, or price is going to come in here, give you a little more structure on a smaller time frame. So right now remember, in order for this to be a swing high, price has to close below this zone, and I personally look for it on the hour, which it did. It closed below this line here. So if I go back down to the 15-minute, it'll give me more. Okay. So once I get to the 15, where's my structure? It's right here, right now, right? And then price pushed up and then closed below that low. So now this is my internal swing high. So now if price breaks this high, I would look for price to come back to my zone, back to my key level, to trade it back up here to this zone. Or let me not say that zone. Or, because we were bearish, let's go back to the higher time frames. Okay. So if price, oh, I'm tripping. So no, if price came here to here, this is my last swing, right? Price tap is at the 88. So as long as price doesn't go below here, then we're looking for price to at least go back up to this high, or back up to this zone, pretty much, but to take out these highs and possibly to the negative 27. Does that make sense? Because if we are seeing prices going up, pulling back, going up, pulling back, going up, pulling back, then we should be expecting it to go back up. Until price breaks this low, this zone, this swing, price is going to continue being bullish. Now, because of this impulse move, price may start selling, but until you get a break of this swing, you're still bullish. So price is at the 88. Depending on what happens next week, price could keep buying. So that is how I mark up my zone to zone. Did Terry say yes, so? So yes. And so let me add the Dixie on here because this pair is an AUD USD pair, right? So we'll go to the dollar. We're going to do the same thing with the dollar. Start off with the weekly. Let me go to the monthly so I can see what's really going on. Okay. Price has been bullish, right? So we look at market structure. We look at market structure. So price broke here. And then price broke here. So if I'm looking at market structure, my last higher time frame swing is here. Okay, so that means price could possibly go from here to here, tapped into the 78 and has sold back down. Now, okay, so this was the last swing. Now we need to go to going closer to price. So we pushed up, we pull back. And, oh, wrong tool. So we pushed up, we pulled back, we pushed up. This did break structure, but then it started pushing back up again, came and gave a swing low, right? And then it pushed up again. So these are our lows. So price can push back to here and could continue buying up. And if there are any questions, it could buy up to, it can either go up to the 88 or it can just start breaking structure, higher time frame structure altogether. Okay. So with that being said, the most current swing was from here to here. Okay. So now we can fib this move. We got one move, we got two moves. So I would be expecting one more push up. Okay, so this could pull back to the 618. It can pull back to the 78. But once it pulls back, it's going to either start respecting this trend line, it's going to start respecting, like filling in the rest of this imbalance. There's some imbalance here. There's another order block here that hasn't been mitigated yet. So price could push down to here until it breaks some level of structure. So if this starts to break above here, then this may have just pulled back to the 50% and starting to continue to buy up. So based off of that, if I'm marking up my levels, so we can go back to the weekly. So if I'm marking up my swings, I'm looking here as a level of resistance and then support and then resistance and then support. Okay. And because this broke structure based on the weekly, this broke this high, this swing high here, pulled back. And I know I'm about to have a ton of fibs on my chart, but I can explain it. I can explain it. But it pulled back to the 78. So price is probably pushing up to the top here. So price came back, retested this key level, pushed up, broke structure, pulled back to the 78. So now it's probably buying up to the negative 27, the 618, and maybe even these highs here.
Kim, can I ask you a quick question before you move
Yes.
anything on the chart?
Yes.
Okay, so say you see the black line.
Uh-huh.
Say the price hasn't broken through that black line yet, right?
You mean?
Say if it didn't, like if it's about to break above it, right? Where your hand is at, over to the left.
To the left?
Going.
Right here?
Right there. Say if that didn't happen yet. Now, when you come for a buy, are you waiting for those wicks on the left to be broken before, or are you just looking at the structure right where price is? Because we was looking at gold. It was nothing there. It was nothing there besides.
Yeah,
it was
because Yeah, because gold is at its all-time high. Or was,
Yeah.
well, no. Gold is,
No. I mean, as far as like it hadn't broke through and given us any structure above the zone yet. But
so
it had,
if I'm,
see those little two peaks right there above the
yeah, so
zone?
if I'm looking over here, so I look at my last swing, that would have been my last swing, right?
Mm-hmm.
So price pulled back to, based on the last swing, price pulled back to the 88 and then sold back down pretty much to a demand zone, to this order block right here, right?
Mm-hmm.
It didn't come all the way down here. Now, if I had drawn my non-squiggly line, put it right here. Oh, no. So from here to here. So now you don't have to use non-squiggly lines, okay? But if I'm looking at, and of course we're on the dollar, so now you can look at the next key level or look for the next key level to determine how far this is going to go back down. So if this would be a zone right here for me, right? So if this pulled back to this 88, I'm expecting price to at least go to this zone, to this key level right here, because I'm doing zone to zone.
Right.
So, and although it came here, and we say we wait for price to show us what it wants to do. 1 week it dropped, the next week it dropped, the next week it pulled back a little bit, the next week it dropped. So now I have another swing. It didn't break this low, but this is my last swing within that, right? So now I would be expecting price to pull back to the 78.88 to either continue selling to break these lows, because we were in this last swing, right? Or because it didn't break this low, or break this high, and now we have a change of character to continue buying. So once price got above my key level, because as you see, it came back up here, and then it broke back out, and then it broke, then it broke above here. And again, I needed to see it break this high, because price can always come back in, and then keep going down. So as long as it's not breaking this swing high. Okay. So once price broke the swing high, okay, and then you can buy it up to at least this zone. Again, wait to see what the market is going to give you. 1 week it bought, the next week it bought, the next week it bought, the next week it bought. And let me put because this was the swing, right? This didn't break that high. So once it once this change of character occurred from this low, this was the change of character here, okay? It pulled back. So now I'm always saying identify your structure. So now you have here, you have here, you have here, 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 and here, okay? And what did it do? It broke structure here, okay? So Now that price has broken structure here and here, now we can say, okay, maybe price is going to pull back to our 618, our 78, or our 88. That's where we want to get in. If we're going to get in for a sell, that's what we want to get in, right? And now that price has pulled back to this key level, has broken structure, now we're looking to take the buy at least up to 618, the 78, or the 88. And if it doesn't break structure, then you just keep buying. But if it pulls back up to one of these zones, because it did break structure, if it pulls back up to one of these zones or one of these levels, or even this area of supply, you're looking for a break of structure. So pretty much like this, you're looking for a break of structure to then start selling it back to the zone, because this is a key level. So every time it comes here, it's going to stop. And it's either going to stop and then react some kind of way, either push up, or it's going to give an impulse move through this zone, breaking this low, and then you'll be looking for the sells, the continuation of sells down to the zone. So to answer your question, so Kai, you would still be looking for price to, because this was our last swing, this push up, this was our last swing. So we're still waiting for price to break this high. Price came here, reacted, which was at the 88, and did not come down to this low here, but it did come to the key level and then showed you what it wanted to do. It wanted to come back and change character to move to the upside, to finish moving to the upside, because price pushed up, pulled back, and now it's continuing. So the key to is to always identify your swing. Now, again, if you're a swing trader, you're identifying the higher, well, no. Let me not say that. You will always want to know where you are on the charts, right? So even if you're not a swing trader, you always want to identify your higher time frame swing. So once you start pulling back and breaking structure, you know how far to expect to go to. So before all of this, once price broke back into the zone, of course, this is now the internal swing, right? So price could have easily just come here and started selling back some more, but it didn't. Price then and I just want to draw this line so we can see how it's wicking, rejecting, but you don't know what it's going to do. Even if you saw this here, even if you saw price come to this swing and gave a bullish order block, rejected, then gave a bearish order block, it still has not broken this low yet, right? It still hasn't pulled back to this key level. So as of now, you just, I would say, don't do nothing, okay? And this is why I say don't do nothing, because you see how it's, okay, now price has broke above this high, So you can either, if you're a counter trend trader, you can either sell it back down where you think it might sell back down. It may come back to this order block and then start pushing down, or, which is what I like to do, I want to see price come back to this zone to then buy it up. If it does not come back, then I don't have FOMO, so then I just missed out. I just missed it. Did I tap it? Order block? Not quite. So, oh, let me keep playing. So now that price has broken this high, this is our last little swing. Swing here. So that means price would have to break this low in order for me to consider a sell. So as we're watching, price has pulled back to probably let's see. Let's see if I can speed this up a little bit. Okay, so if you look at it, this was our last swing from here to here, right? Price pulled back to the 618 and then started giving bullish momentum. It get a bullish order block here, a bullish order block here, but that doesn't really mean anything if price is selling. You got to see some breaks of structure, okay? So if price, if all this wasn't here, I would say I would be looking for price to come back to the 78, right? That's where I like for price to come back to. There's a bullish order block here that price did come back to. I like to see this 78. So if price did not come back here and I missed it, then I missed it. Then I will start looking for breaks of structure on the lower time frame to then start looking for the buy back up to these highs. That's gonna go too fast. Okay, so as you can see, price pull back to the 618. So I would be the 618. So I would be looking for price to go, oops. I would be looking for price to go, was that AUD? Was that on a daily? Was that on a 1 hour? What the heck did I just do? Oh, darn. Okay. So I would be looking for price to go back to, where was I?
Did it knock you out of replay? It might have knocked you out of
I think
replay.
when I think I hit like the next,
You're on the DXY.
oh,
Oh,
then
you sure
that
were.
explains it. But where was I? Let's go to the weekly. There we go. Okay, we were right here. We were right here. So now I would be looking for the price to tap into the negative 27. So once it pulls back, if you just go to the negative 27, you're good. Okay. But if you just look at price, if you look at structure, price pull back, price broke structure, pushed up, pulled back, pushed up, pulled back, not breaking these lows, right? Now, because this is news, this was on 3/9, 3/9, 3/16. So this came in, well, for me, it did not break structure. Okay, just let me make that clear. For me, it did not break structure. And what I mean by that is, and let me move my fib so I can make it clear and simple. For me, now on a lower time frame, it probably did break structure, okay? But if I'm trading from the weekly, and this did not break structure, because the last swing is right here. Remember, this did not break this high, close above this high. So everything in between here and here is ranging. Price did not close below here. It did not close below here. So this is my last swing. And so really, it really should be, hold on. Here, price closed above, so it's here. Price did not break below, so it's here. Price closed above, so it's here. Price did not close, so it's here. And then price broke above here. So that's how it should be. So I would be looking in between this last swing. This is all ranging from between this high and this low, right? So I would always be looking to buy from the low. Since price is bullish, creating higher highs and higher lows, I would always be looking for price to come here and buy. Here, this came down a little further than that, but it wicked out all these lows. It swept these lows and then bought up. Now that you have this break here, I would be looking for sales. Like once price broke, well, let me see something. And see, this is where it gets, this is why it gets confusing, right? Because you're still in this swing right here. But price pulled up, broke this low. So I would be looking for price to pull back. I would be looking for price to pull back and continue selling. But because price never broke this low, when it broke this high, your thought process has to say it's either going to sell up here and then sell and break these lows, or it's going to keep buying because it did not break this low. So that's how you have to look at it. So price came in here based on the zone to zone. Once price broke, came back into at this key level based off how I traded, okay, and violated this order block, I would have been looking at least for the pullback to continue to the next zone. So that's like 7,800 pips, or is it seven? Yeah, that's 7,000. Oh, this is the Dixie. I don't know what that is. Maybe it's 786 pips. Either way, it was from zone to zone. Okay. Because you don't know if price is going to break this high. It didn't break this low. You don't know if it's going to break this high. It didn't break the high. So all you can do is trade within this swing. And then once price got here, me personally, I would have took my money right here at this candle. As soon as it hit that, I would have taken my money and then waited for price to show me what it wants to do. So, and I pulled up the Dixie, not to trade it, but to show that that we have a push up, a pull back, a push up, this pull back. So we're likely pushing back up because here's our last swing from here to here. So I would be expecting price to pull back. I would want to see price pull back to the 78. If it's just tapping into the 50, then it may just continue buying up. Or it's going to pull back, oops, and then continue buying up. And then based off how I mark up my zones, zone to zone, I just look for higher time frame levels of support and resistance. So this is the first one here. Here, you see how it broke out and then pulled back to the zone, and then pulled back to the zone, and broke out and then pulled back to the zone. So that would be my first level of my first key level. And usually you can mark up, for instance, let me go to the monthly so we can see this a little better. Usually I mark up where there are very strong swing points. So price came here and reacted for 1, 2, 3, 4, 5, 6 months. It sold. And then it pushed back up. And then when it pulled back, it reacted, right? And then when it broke back in, it came back to the key level and then sold. Same here. Price came here, reacted, didn't tap it, but it reacted, and then reacted and sold. Then it came back and broke through and then pulled back and then reacted based off this this wick here. So now it's kind of in a range. I would definitely wait, although it's looking somewhat bullish, but you're here at a monthly order block. So price could just tap into there and continue selling down. So anything that is against the dollar, which was AUD USD, it's been buying for several months. It pulled back, and then this new month has started. You got 21 days. So this new monthly candle could be a bullish order block. We don't know. So all we can do is trade it accordingly based on how price is trading. How price is trading from here on. So once I go down to the daily, price gave a swing, or gave a swing here and then another swing here. But I would have marked that. But price did break structure here, right? And then price broke structure here. So price has been up, up, up. It didn't break till right there. So this is up. And then Price has not broken these lows yet. So you don't know if price has tapped into, it did tap here and then it broke here. So what I would be looking for, since it broke here, is a push back here to possibly sell down, or price is going to break this high and then continue buying. So right now, based on the daily, price was bullish. So based on this daily, this candle should be bearish because it's against the dollar. Now, is price going to go here and continue buying up? If so, then that means the dollar should be selling down. And I would guess that the dollar again would be selling to this area of demand to then start buying back up, possibly. Because this is the last swing. This here is the last swing. Any question? Oh, I do have a question. Let's see. Oh, Terry. Ain't nobody but Terry. So yeah, any questions? Any questions on that? So I'm gonna move to EuroCAD just to do the same thing. Higher time frame. Is this the pair I hate? I hate. So we'll look
You
at our
picked that pair.
Huh?
You picked that pair.
No, did I pick this pair? Ah,
Yes.
dang. What was I thinking? So what I like to do is look at my last swing, right? I like to look at the full story. I need to see I need to talk the whole story out, map the whole story out. Higher time frame, change of character, right? So then I fib from there to there. Price pulled back almost to the 78 and bought back up to this zone. So then I would have expected it to play out here, right? It pulled back to the 618. I would have expected it to at least buy up to the negative 27, but it did not. So it pushed up, pulled back, pushed up, pulled back, did not break, or maybe it did. I think it did. So now we're up, pull back. It did not break this high, right? But then it broke this was the last high, this low here. So it broke this low here. So now I would be expecting price to pull back somewhere up in here, which is probably the 78 or the 88. You see there's imbalance right here that hasn't been mitigated, to then either continue to sell down. And let's fib that move. Let me move these lines so I can see. So I would be looking for price to come back in this area somewhere. There's an order block that needs to be mitigated. To either keep buying or start selling back down. And it could just come back to here, or at least that's where I would sell it to. So if it tapped here or this 78 and then started breaking structure, then I would at least be looking for it to, let's mark up the zones, mark up the zones. There's a key level here. Okay. And then here's a key level. See, everything else I have to squint, like, so it would just really be this zone here. Oops. Okay, so. Oh, here's one right here. I can see it clear now. I see it clear as day right here. Okay, so price can either come here and then start breaking structure, meaning if price pushed up, pulled back, pushed up, pulled back, pushed up. If it broke structure, you look for you look to enter price somewhere up here to take it back down to the next zone. And this zone is approximately 697, almost 700 pips. So, um, so yeah, I would look for price to come up here. If you don't get that break of structure, you don't sell from the zone, you just wait for price to show you what it wants to do, right? It's either gonna break into the zone, pull back, because there's an order block right here. It's either gonna pull in, break out the zone to the order block, then maybe come back and start breaking structure to sell, or price is going to break out the zone, tap into the order block, pull back to the zone, maybe break structure, and you look for the pullback to then continue selling. I mean, buying. Oops. Yeah. Does that make sense? And then you would just take it
Sure
to.
do.
Because the next key level would be, I would just make it at these highs right here. These touch, touch, touch. So you would trade it from one zone to the next. And then I would definitely be looking for it to, once it break out, 500 pips from that zone to the negative 27, because you got to remember where you are on your chart. Always know where you are on your chart. Because that will help with, and I'm sure once I look at GJ, it's gonna make sense to me what happened today. All right, so GJ, same thing. I look at the higher time frame. I look for my last swing. So you have this swing here. Okay. Did that break structure? No. So you have that swing there. So if I fibbed from here to here, that means I'm looking for price to at least come up to the 78 here. Price action, which are these wicks here. If no off was on, he would say there's no candle on this wick, so it's definitely going past there. So now everything between here is the range, right? So once price came, broke these highs, which was liquidity, these are relatively equal highs. And although it did not close below, it swept the low, did not close below, and then started breaking this internal structure, right? So once price started breaking this internal structure, broke this here, you can fib from here to here, and price came back to your 78.88. So now I am expecting price to come back up almost to the same zone that we marked for the swing, which is the -27, almost to the 78.6 of the swing, of the higher time frame swing. So once price pulled back to the 78.88, there was a violated order block here because there was a actual structure right here. Because price broke this low here, which made this the swing high right here. And if we go down to the smaller time frames, you'll see that even more clear right here. Price broke here, which made this the swing high. And then once price broke that swing high, for short-term trades, price pulled back to the 50% and started breaking these internal swing highs. So you could have fibbed this move to pull back wherever that is, and then take it to the -27. Okay. So now you have this push up, this pull back, this push up, this pull back, this push up, this break of structure, price pulled back to that break of structure, and then started creating more structure. And if you look at where price broke structure here, okay, and you fib the move, price came back to 618, almost tapped into the 78. If you did not get in at this point here, you could have waited for this break of structure and the pullback to that structure. And I personally like to look for the institutional candle, which is the last, where was that? Which was the last down candle before the up move. Where was, oh, right here. This green candle was the last up candle before this break of structure. So that's where I like to mark up where I want price to come tap into and sell or buy. Okay, I don't necessarily look for the fair value gap. I just look for the institutional candle. For instance, once this broke, it didn't pull back to this institutional candle. Okay, but once it broke here, it pulled back to the institutional candle and then started selling. So once you get your break of structure, and that's of the swing low, and this is your swing low because price broke here, right? And so actually there was another low in between that. So it was from here to here to here to here to here. And then once price broke that low and then broke these lows, that's when it pulled back. Now I have heard on my 1 or 2 days of listening to ICT, who I tried, okay? I tried. I did hear him say, like, this pullback, it didn't come to the 78, but because these candles are all the same color, that you can use that as your one institutional candle. So if I go up on the weekly or the monthly, it's probably going to be one, on it. It's probably going to be one candle. Hold on, where was that? Let me mark it so I can, oops. It's probably gonna be one candle. And there it is. One candle on the higher time frame. So you can either mark it up from here to here, or you can mark it up from body to wick. And did it tap it? It snipered it. Sniper. Sniper McSniper. So, but I still have 3 candles here. So, I mean, you could just use the last candle. Came in and then sold down. So that's FYI. The one time I did listen to ICT. Okay. But this would have I would have definitely looked at this as the breaker structure and then pull back. So with that being said, where was I? On the monthly. So once price broke this zone, okay. Price broke out, pulled back to the zone, and then kept buying. And then for those who stack, you just look for your swing highs and wait for price to come back to then keep buying. If it doesn't come back, don't worry, it will. So the fact that it broke this high, price is either going to tap into this order block and then start selling back down to this zone, or these wicks are considered some type of market structure. So it's going to tap into one of those wicks and then start selling. And then you could sell it down to the next level, the next zone, and then continue buying back up to these highs. And for a go, same thing. I'll go to the higher time frame, identify my structure. Here, 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 and here. So this is the last swing. I personally, so this came up to what, 24, where's Terry? 2450, Terry? Did this come up to 2450? Yeah, it came up to 2450. For those who trade quarter levels, and then gave us a drop. So this is probably pulling back to somewhere up here, somewhere here.
2,400.
2400.
Where,
No,
what's that?
no, this one went to 2450.
Oh, Lord, it did?
Yeah, this one
Oh,
went
it's
to
going to
2450.
2,500 then. It's about to make some all-time high.
But it's gonna pull back.
What that is right there? Yep, right there. What that is?
It's gonna either pull back 2150 or 2100 to then continue to, because price is still bullish, right? And we may get some months of bearish, but once it pulls back to here, then we'll look for it to go to 2500. And it may not even come all the way back down here. Gold is
I
one
was
of
just about to say, go do what it want to do. It might don't even come. They might just start buying and go back to 2,500.
and you're right. These next 20 days can give us a higher candle to 2500. This is why I say find one pair and master the traits of that pair. Because one thing I know about GJ, I know exactly what GJ is going to do. I can look at it and say, okay, it's pulling back. I know that it's pulling back. This is a little order block. This is a little order block for my buy zone. This is order block right here. And it pulls back. Like I know GJ, okay? I know US 32, but I know no GJ. And it pulled back and gave me this bullish order block. Pulled back to the zone, pushed back up to here. So you can either get in at this order block or you can get in at this order block with the lows here, and price came once the I'm sure this was some kind of news on a Thursday on the 1st. You could have set your limit at this order block. Oops. Somebody moved somebody. You can set your limit at about to fight. You can set your limit here, put it below these lows, and then wait for price to do what it's going to do. Now, can you imagine? That's up 4,000 pips, 4,500 pips. If you wait for price to pull back to you, this was going bullish. Wait for price to pull back to you and then get in the trade. And then you could have traded from one zone to the next zone. This zone to here was over 1,300 pips. That's on a monthly. I'm not trading from the monthly, okay? And then once like these candles started forming before all of this would have been my next high that I would have been looking for price to break through. And then once it broke through, I look for where price could come back to. Did it come back to the zone? It did come back to the zone. So it came back to the zone and then started buying. But I'm sure on the lower time frame you could see it. So once price broke these highs right here, there was imbalance that needed to be filled here. I like for it to come back to my zone. You could have put an entry here. Again, put it below here, or like me, I put it below the zone and then trade it from one zone to the next zone, or you could have taken it to these highs. Or you just could have sat and watched what price was doing. Once price got back to the zone, you look at market structure. Price came here, pulled back, came here, pulled back, no breaking of the lows. So you could have stayed in a trade, no matter that this was pulling back. It did not break this low and then started pushing up. Then this pulled back, pushed up, pulled back, pushed up, pulled back without breaking lows. Did that break? I think it broke here. Then pushed up, pulled back, pushed up, pulled back. I would be expecting a continuation of a buy for GJ until price starts breaking. Either break this low, or if price breaks this high, then this is my low. And then if price broke here, I'm waiting for the pullback. I'm fibbing from this high to this low, looking for the optimal trade and entry to then take it back down to these lows. Or if you want even more, well, that's it. This is the swing key level, right? So if you wanted to, like if price pulls back here, I would either be looking for some breaks of structure to continue buying, or for price to break this low and then pull back to the zone to go to the next zone. That's the zone strategy that I use. Any questions? Who's on here? Oh, it's a lot of y'all on here.
I have to go to work soon. I have to go to work soon, but
That time?
everyone, I'm still in GJ. Should I get out when the market opens?
You still in GJ?
Yes.
I think
I'm in
GJ is
positive.
sell. I think it's
It's
gonna
what?
pull, I think
Okay.
GJ is gonna pull back to this.
That's what I was thinking too, so I stayed in
here.
it because I had a decent entry. I wasn't too much negative.
Yeah, but then I think it's gonna go bullish.
Buy up. Okay.
Yeah, I think it's gonna at least, if it doesn't pull back to the zone, but I do think it's gonna pull back to the zone.
Okay, good.
But at least to this, feel this imbalance, this last institutional candle before it started pushing up, at least to here. So we're talking about 230 pips,
Oh, good. Thank you so
if
much.
not more.
Yeah. Okay.
Yep, I think it's selling. You waiting on me to post about the elite? It's coming.
Yes, ma'am.
It's coming in. What's today's date? Today is the 7th. It's coming in 2.5 weeks.
Okay, like close to July, huh?
Close to July. Yep.
I just don't want to miss it.
That's because I'm kicking all them other bad kids out.
Thank you.
Red, Kai, Rogia, Chanel, like Taj, Terry. The bad kids gotta go. The bad kids gotta
Well,
go.
it's too late. You done already gave us the juice, so you can kick us out now.
Bad kids gotta go. So yes, that will be coming out in a few weeks.
Thank you, Kim.
You're welcome. Any other questions?
You think Tyler post this tonight, Kim? I want to relook at it.
He probably will post it tomorrow, but I'll get him to post it.
Okay, thank you.
You're welcome.
Okay.
Any other questions? If not, thank you for joining the beginners trading session for Friday, June 7th. No, I'm just playing, y'all. Thanks y'all for coming. And y'all know if y'all ever have any questions, feel free to ask in the chat, in the Trading with Little Kim chat. And I will be more than happy to answer. Tammy? Who's Tammy? Tammy? Tammy, you shy? You don't have to say nothing.
No, I'm here.
Oh no, I was just kidding. Are you new? Are you new to the group?
Yes. Yeah, I
Oh.
just joined this week.
Oh, okay. Well, welcome. How long have you been trading?
I've been trying off and on for about 3 years.
Okay. And what is your hiccup with trading? Let me find out what's your, what's your gripe about trading? Or what issues do you
I think it's the usual newbie stuff. Like I tried indicators. I jumped from one strategy to another strategy, no discipline. You see a green candle, you jump in without looking, you know what I mean?
Oh yeah. Okay.
Yeah. It's just the basic new stuff.
Okay. Well, welcome aboard.
Thank you. You guys did go into so much detail. This
Yeah,
group is amazing.
well, that's what we're here to do. Give you the sauce to go be able to trade for yourself. So
Yeah, not everybody's giving up the sauce though.
I know, I know, I know.
Listen, I said the same thing. I was trading for what, 2-3 years, and I thought I knew market structure and took Kim's class. I ain't know a thing.
You got educated, right?
I'm telling you, you better join that elite group.
Yes, so Tammy, we have what's
Yeah, how much is it? How do I get in?
well, I will be posting information about it
Okay.
in a few weeks.
Oh, okay, good.
And let me see who's all on here. Maybe I can tell the secret about the elite group. So it says $99 a month, but it's not $99 a month. It's really free. Okay, just FYI, don't tell nobody. If y'all tell anybody, kick it.
What?
They will
You-
tell they will tell you you gonna get the boot. You're gonna see the boot. You're gonna see the boot. No, I'm just kidding. Tammy, don't pay me no attention. Okay. But yes, so it will come out in a few weeks. We only take a certain number of people,
Okay.
and there's some rules to being an elite member. You have to always participate. You have to show your charts. You have to, be active in the group. And what are the other rules? Every Friday, today is Friday. Every Friday, you have to post your report card, which is your P&L, so we can look and see what you're doing, whether you're over trading, whether you're over leveraging, and then we work on you from there.
Oh, you guys really take them by the hand then, don't you?
And you have 3 months. So the goal for elite members, now this first elite group, they're a little special. They
Hold on now, I'm a little offended.
no, and Terry, you are the most special, okay? The goal is to take them from $200 to at least 10K in the 3 months.
Is that just in Forex or is that any?
Just in Forex, but
Okay.
I mean, I don't trade, you mean like options and futures and all that kind of stuff?
Well, yeah, I didn't know if you guys were doing that like with just Forex or you could do it with stocks or, yeah, options are a whole nother game.
Stocks, yeah, so from what I know and from what I've seen on these charts, you can trade anything the same way. Like
Okay.
the strategy is the strategy for stocks, options, future, like whatever it is.
Okay. And
Yeah.
I noticed when you mentioned ICT, you made it so much simpler because he
No,
just
no.
rambles.
I
You cannot concentrate. You can't. It's hard to learn.
I cannot, my attention span is not built for ICT. So
Mine either.
I know
Exactly.
Todd talks about ICT a lot. He's more the ICT person than I am. I just need something basic and simple. I need it for a break of structure or a change of character to either switch my thought process from buys to sells or vice versa. That's all I need to see. And if I see that it's buying, then I'm just gonna always look for buys. If I see that it's selling, then I'm gonna always look for sales. Occasionally, I will say this, I know how to counter trend and I can counter trend. And I do counter trend, but when I'm teaching, I try to teach trading the trend only. And why I do that is because I know when I started out, I always got confused that's when I got confused on the chart when trying to counter trend.
Okay.
Now, if we have a higher time frame change of character, if you saw how I was marking up the swings,
Mm-hmm.
and there's a higher time frame change of character for me, like
Uh-huh.
an internal change of character, then I will definitely switch my bias from from a sell to a buy or a buy to a sell. But if I'm on the lower time frame, it all depends on, how low I'm going down. But I'm not, it has to be a clear change of character for me in order to in order to change my bias.
Okay.
Yeah. And then all I look for is a pullback to an institutional candle, an order block, or something to then start buying or selling. Like, that's how simple I need it simple and plain.
Yeah, and a lot of people say trading is simple, but
Once you
we
know
make
it,
it hard.
once you know it, is
Yeah.
very simple.
Yeah, I 100% believe that. But I just don't have discipline. Like I need to pick one strategy and practice it and stick with the plan. Yeah. I
Yeah.
understand all the concepts, like all the words you're saying, I understand all that.
Okay,
But I
good.
really, yeah, I don't
So
have any
that's
discipline.
so that's
So I
the
ain't take it serious enough.
that's the purpose of Elite, like to just kind of shift, your thought process, especially if you don't have a trading plan, if you don't have a specific strategy that you follow.
Yeah.
Just to get you in that mindset, because and they'll tell you it's very repetitive,
Yeah. Yeah,
very,
they're so mechanically trading.
that's me.
Yeah. But they say that's what's profitable and that's what works.
Yes. Absolutely. Patience. Yeah, you have to be a patient trader. Because we have some people on this call that's not so patient. I mean, they do okay, they do good, but
Yeah.
they a little spastic. They are more
Scalpers.
scalpers
Go ahead
than.
on, say my name. Go ahead on, say. That's what
I'm
you
not
want to
saying
do.
that, I'm not saying nothing, but I mean, hey, if the shoe fit, brother. If the shoe fits, okay. So yes.
Okay, I will definitely be watching
All
for
right.
the Elite.
Mhm. All right, y'all. If there are no more questions, then I will see y'all on tomorrow's call.
Thank you, Kim.
Thank you.
You're
Yeah,
welcome.
Thank you,
Kim.
All
Bye.
right, Cam.
Oh, shut up, Terry. Bye.
Bye, y'all.